Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we will be discussing regarding Nifty and Bank Nifty, what to expect from the current juncture, as well as the key levels for the index in trade today. We'll also be discussing on the sectors and stocks in focus for trade and for the next few sessions as well. First up, coming to the update in the global markets in trade yesterday. Yesterday, the US markets witnessed a correction with all the three indices witnessing selling pressure. We had the tech-heavy Nasdaq, which ended below its 20-day EMA level for the second consecutive trading session. The Dow has tumbled by 1.3%, while the S&P 500 has ended lower by nearly 1%. Going forward for S&P 500, the zone of 5,520, 5,500 will be the crucial support. Any sustainable move below the levels of 5,500 would lead to further selling pressure in the index towards the levels of 5,440 in the short term. Now coming to the update regarding Brent crude. So Brent oil has been oscillating near its 100 and 200 day EMA levels. Going ahead, the level of 85 will act as the immediate hurdle for Brent oil, while the level of 82.74 will be the crucial support. Any sustainable move in either direction will lead to a trending move in Brent oil. Dollar index, if we see, the index has witnessed a correction in the last few sessions, and currently if we see 103.6 is the support zone for the index. Now coming to the update regarding Nifty. So yesterday we had the weekly expiry for the index, that is for Nifty. The index witnessed an extremely good move on the upside and managed to close at record closing highs. But however, if you see the price action through the day, the index started the day on a negative note. However, the index took support near its 8-day EMA level and witnessed an extremely smart rebound of nearly 300 points. It has ended at 24,800 level with a gain of 0.46% for the day. If we see the technical charts and the indicators on the daily scale, the index has formed a sizable bullish candle, and currently the daily and weekly RSI is quoting above 77 levels. It is gradually approaching the overbought zone. Going ahead, 24,680, 24,660 will act as the immediate support for the index. As long as the index is trading about 24,660, it is likely to continue its positive momentum and test 24,880 followed by 24,960 in the short term. While on the downside, if the index slips below 24,660, the next support is placed in the zone of 24,570, 24,550 levels. Coming to the derivative data, so the July futures yesterday surged by 0.67%. and the cumulative open interest surged by over 8%, which indicates overall long built up. Among the constituents of the Nifty index, we witnessed that 24 stocks have witnessed long built up, 10 stocks have witnessed a short covering rally, while 10 stocks witnessed short built up and 6 stocks have witnessed long unwinding. Now coming to the option chain data, that is for the next week expiry. We have 24,800 strike, which has significant call open interest followed by 25,000 strike, and on the put side 24,800 has significant open interest followed by 24,700 strike. The PCR currently is at 1.32, that is, so the next week is, that is, it would be the monthly expiry as well for the index. Now coming to the update regarding Bank Nifty. So in trade yesterday, the bank index ended above 52,600 mark with a gain of 0.43%. On the daily scale, it has formed a bullish candle with a minor upper shadow. Going ahead, the zone of 52,800 will act as the immediate hurdle for Bank Nifty. Any sustainable move above 52,800 would lead to a sharp upside rally towards 53,100 followed by 53,400. On the downside, the zone of 52,300 would be the immediate support. If the index slips below 52,300, the next support is seen closer towards the 52,000 mark. If we check the option chain data for Bank Nifty, we have 53,000 strike on the call side, which has the highest open interest followed by 53,500, and on the put side it is 52,500, which has significant open interest followed by 52,000 strike. Coming to the key market indicators, so with the union budget approaching, the volatility index has also witnessed a gradual upsurge. So India VIX surged by over 2% in trade yesterday. Going ahead, any sustainable move above the levels of 15 will lead to a sharp surge towards the mark of 16.2 in the short term. Despite of sharp upside rally in frontline indices, the advanced decline ratio was tilted in favor of the declining counters in trade yesterday. This indicates selective large cap stocks are participating in the rally. So the top 5-6 stocks from the Nifty index have resulted in the sharp surge in trade yesterday. Coming to the key sectors in focus, since the last 9 trading sessions, Nifty Financial Services has been forming a strong base near its 10 EMA zone. We believe that any sustainable move above the levels of 23,900 would lead to a sharp upside rally up to 24,400. So in trade yesterday, the other sectors which witnessed good traction were IT and FMCG. These also sectors are witnessing traction on the upside. Coming to the FII DI data, so FIIs from the past few trading sessions have gradually been accumulating in the cash market segment, that is. So in trade yesterday also they bought to the tune of 5,483 crores, while DIs sold to the tune of 2,904 crores. FI long short ratio for index futures is at 80.67 on a net basis, this as they purchased about 42,744 index futures. On the stock futures front, FIs have bought to the tune of 1,02,756 contracts, while on the options front, FIs sold 91,363 call contracts and sold 1,45,608 put option contracts. So friends, that's all for today. Thank you for regularly listening to our podcast. Wishing you all a happy trading session. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.